Hey traders, we'll be getting started in just a moment. Please take a minute to read this disclaimer. All right. Good morning, traders, and welcome to this weekly technical outlook. Today is Tuesday, May 26th, and I'm Michael Boutros, Senior Technical Strategist with FOREX.com. Pleasure to start off the morning with you. Good morning, Roland, Jose, Richard's in the house, Ken, Seth. Great to see everyone this morning. So we are heading into the start of a market that is still kind of in a holding pattern. We're seeing some various stretches. Aussie being one of the ones that I'm kind of still fixated on, and the dollar CAD breakout, which is still holding above resistance. So that's still in focus. But we got still a lot of range breakouts that need to kind of materialize. So on the menu, we'll hit the US dollar, euro, sterling, Aussie, dollar CAD, dollar yen, dollar Swiss, gold, oil. Take a quick look at Bitcoin, still sitting at support, and a quick breeze through the key equity indices. Any other questions or trade setups? As always, feel free to throw them on the message board at any time. Special welcome to our YouTube subscribers. Quick reminder, if you ever want to jump into the live session, the link to the GoToWebinar is provided in the description box below. You can always click in there to drop any questions that you do have. Also, do give us a like and subscribe if you find these webinars helpful. All right, Eman, good morning. It says, welcome back. Same to you. Hope everyone had an awesome weekend. Here's what the DXY looks like right into the open of the session. Our last weekly update, which was on the 13th of the month, still continues to highlight the same major, larger range that we're in. The resistance zone was 99.49. That was the May objective swing high. 99.52 was the gap, the uncovered gap that we made also last month. And, that's the major resistance we need to clear to really fuel the next leg towards the major pivot that caught the yearly highs. This is the weekly chart. So fast forward a couple of weeks, here we are. Last week's objective swing high was 99.52 on the dot. You can't make this up. Almost made a doji. Here we are trading right below weekly resistance, 618 decline of the yearly high, the objective January high, right? Key pivot in price. So that's been our focus for the last 3 weeks, is what happens near 99.50. Do we get the top side breach that extends into 101.15, 101.41? That's the major resistance on the 2024 low close, the 2024 swing low. Both of those converge on the July highs from last year, the November highs from last year, and it caught the high this year. So this is still your major lateral level. Right now, we're right below initial weekly resistance. Keep in mind two things on the downside. There's your 52-week moving average coming in near 98.50. So just 50 pips lower from where we are, you're at that yearly moving average. Just below that is the objective yearly open. Not Mike Boutros' opinion, not FOREX.com's opinion. That's 98.24 all day long. So two support targets on the downside, major resistance confluence on the upside, looking for a breakout of this zone as we enter into the final week of the month. Here's what the daily chart looked like, and here was our last short-term outlook. Quick reminder to anyone who's new to the room, on all my reports, you'll have the technical forecast on the asset, which will be the weekly chart, and then you'll have the accompanying short-term outlook on the asset, which will have the daily and 4-hour charts, are part of our multi-time frame approach. Here's the dollar index as we were looking at it. Again, this was written back on the 21st, so not too long ago. And we were looking for a reaction at you name it, 99.50. Okay, that ended up being the high that day. We ended up pulling back. Key support 98.69 is the August high day close, the May low, and just below that is the objective 200-day moving average. So whereas the 52-week moving average is a little bit lower, there's the 200-day moving average at 98.55. So the levels just match up really well, right? We're testing confluent uptrend resistance. We're looking for a reaction here. That's key support. A couple days later, here we are still trading within the confines of the uptrend, not too far off that slope support. Drill down deeper. Here's the 4-hour chart look like back then. Here's the 4-hour chart looks like now. Same slope, okay? Same lateral zone of resistance. There's 99.52, that gap close from back there on April 26th. Converges on the median line, converges on the 618 retracement, converges on the January high, excuse me. All of that right up there. So support, last week's swing low was 98.95. I left that on there. We tried to test it on Wednesday last week. We closed up here on Friday. Here's the drop in overnight trade. We ground out right into that same zone. The 25% parallel is right there. Initial support, 98.95. Okay. Key support, near term bullish invalidation. If the DXY is heading higher on this stretch, losses would need to be limited to that 200-day moving average. Essentially, you're looking at 98.55. Okay, you've got that May low, the August high day close there. You've got, again, that 200-day moving average. All of those converge on basic uptrend support basically into Thursday. So that's the floor that would need to hold if the DXY is heading higher. At the end of the day, you need a breach. You need a daily close northbound of 99.52, 99.51 to validate the next fueled up, upshot for the dollar. And then it's 100 spot 15, 100 spot 35 all day long. That's still going to be the key region on the upside if this breaks. So it's do or die. Now, we don't really have any major event risk on tap this week for the US dollar until the core personal consumption expenditure on Thursday. That's going to be the doozy, okay? That's the Fed's preferred inflationary gauge. The core personal consumption expenditure is expected to uptick to 3.3% on the headline. If it comes in hotter than expected, which it very well may, remember, PPI numbers exploded to 6% on the headline 2 weeks ago. CPI numbers were coming in hotter than expected. This is now starting to take into account some of the oil and energy prices that we've been seeing on account of the Iran war. And so everyone's fixated on the inflation numbers. Look, Warsh takes the helm today, right? He got sworn in on Friday. And so the new regime at the Fed is basically commencing now. Is there scope for even the discussion of potential easing in the light of a market that's trading at all-time highs? Labor markets seem pretty stable. Inflation is running for the 5th consecutive year, not only above target, but the trajectory not heading in the right direction, right? It's like a recipe for what you would anticipate to see Fed tightening, not easing. And so we'll see what this new Fed has for us. I think the markets are still, as including myself, I still give him the benefit of the doubt. I still think the Warsh is going to do the right thing. He was very critical on the inflation debacle that we saw with the previous administration. So I do think he's going to put us on the right path. But the point being is that interest rate expectations have been continually getting kicked out. Here's what the Fed fund futures are now pricing in for December, nearly 55% chance that we're going to see at least 25 basis points in hikes. You kick it out to January, that gets up even higher. You're above 60%. So the markets are starting to anticipate this, that the inflationary problem is going to persist, that even if the Strait were to, and it does seem that we are getting good news over the weekend, guys, right? That the negotiations are ongoing. You got a lot of countries that are involved. And the anticipation is within the next couple of days, it's either going to buckle or break in one direction or the other. So if there is an agreement, best case scenario, straight reopens, there's still going to be quite a backlog of a few months before we get everything flowing in a normal flow, a normal pattern. So that being said, the concern is that you're still going to see the price remain elevated for a little bit, and that's best case scenario. So is there scope to cut? That's going to be the question. And as we head into Thursday's PCE number, that's going to be our first real clear-cut picture of what the inflation story looks like as Warsh takes the helm. Does that make sense? That's DXY. All right, next up is Euro. So same picture here with Euro sitting at key support. DXY at just below major resistance, Euro dollar just above major support. So let me take you back to the weekly chart. The focus here, and we gave this the Euro forecast back on the 16th of the month, was that we were coming off of major resistance. Quick reminder, again, everyone who's new to the room, I believe in 100% clear transparency on every single one of my reports. In the first paragraph, you'll have a link to the previous update on that asset so you can see how we've been faring. And this is a major resistance zone we've been watching for a while. This is back from, what is that, February? No, this is the 5th, right? And we were talking about, hey, we're at major resistance. 2026 yearly open, the 2025 high week close. That was also the high close for the year in 2025. All of it lined up at 1745, 1775, and for 4 weeks, that converged on the 618 downslope. We were looking for a reaction there. Fast forward, here's the reaction. Now, we highlighted that was starting to break down this month, and we said, hey, that's a pretty big reversal candle we're making. Watch for a big inflection at 1599 into 1578. That's the January close low, the 618 retracement of the advance off the yearly low, and a really nice pivot in price, right? So we were looking for reaction there. 3 weeks later, here we are, still sitting right above support. That level, 1578 into 1599, is the key zone that we're looking for. You would need a weekly close below this pivot, okay? Look to the left. It's also that swing high from back here in April of last year. You need a pivot, a weekly close below this to open up the next leg towards 1482. That would be a 1618 extension just from the high that we made back in April. So the levels are really clean. For the last 2 weeks, we've been sitting at support, or at least for the last week, we tested support. This is your major support zone on the euro dollar. Initial resistance at the 52-week moving average, that's 1670. Key resistance still 1745 into 1775. So the levels, when you're able to make all of those assertions from just the weekly chart, surely the daily must have something better, and it does. Here's what the daily chart looks like on euro dollar, and here was our last update here on FOREX.com. Here's the side-by-side comparison. This was written not too long ago, right on the 15th of the month. We were talking about this drop towards 1602 was the first level. The bottom end of that zone was 1578. Okay, that's the 618 off the low. 1602 was two equal legs off the high, and the January low close, 1599. Here's the reaction. Now, we got rid of that 100% extension, and we're just looking in the range right here, 1578 to 1599 right now. That's the focus, okay? You've got downslope support. This is just a parallel of downtrend resistance off the high, extending off that mid-low from April right there. Here's the rebound off support. The focus is on this recovery, okay? The risk remains lower below 1745. But if we're heading lower on this stretch, the 200-day moving average needs to hold near what is that? 1682, 1681. Keep in mind a few things. This was an objective break of the monthly opening range on the 14th, which has you looking for a late month low. We executed a low on the 21st. Is that the low? Potentially. But on this recovery, this is your first hurdle. 1667 into 1680. Okay, bearish invalidation, the level that would need to break for the bulls to reassert control is 1745. A break below 1578 opens up that potential drop towards 1582. Here's what it looks like on the 4-hour chart, and here's what it looked like back then. Same slope, same pitchfork, we're just grinding into support. So we broke that level. We drove into it last week. We tried to break, couldn't make a move, a budge below. Here's the recovery. Initial resistance, 1667. There's going to be that 200-day moving average at 1682. Want that to hold if we're heading lower on this slope. Bearish invalidation, 1745, 1731. That's the objective May open and the yearly open. Both of those converge on downtrend resistance. A break below 1578 opens up the fuel for a potential decline towards 1482, 1497. There's so much down there, guys. The November low day close, the March 2020 high, the 2022 swing high, the 1618 off the high, all of it converge right here. So the threat with this pivot zone breaking is for another 100 pip potential drop towards next major support zone. So the focus is on what happens here early in the week. Guys, we only got 4 days left on the month. It's a shortened holiday week, so tread nimble, stay nimble here. Reduce position size would be prudent on any new exposure that you put in, and obviously keep your eyes on the headlines, but that print for PCE is going to be the major event risk for this side as well on the euro. Questions? All right, pick up the pace here a little bit. Sterling, similar scenario, only let me take it on the inverse. The inverse, right? So whereas Euro's at support, Sterling's trying to break resistance. So let me take you back to the weekly chart. Here's British pound as it looks like on the weekly chart. And here's our last update. This was written back on the 30th of last month, so it's a bit dated, but nothing's changed. The focus into the start of this month was, what do we do near 36? Big level, 618 of the entire year-to-date range. And you even had the high day reversal or the high week reversal close from last year right in that zone. You popped through, you did mark a weekly close above, and then you marked an outside weekly reversal lower 2 weeks ago, right? So we've been working within the confines of this one weekly candle for the last 2 weeks, and we're like, all right, well, what do we do from there? First level of resistance was the 52-week moving average and the yearly open. We held below the 52-week moving average last week. We closed right below it. Here's the start of this week. We're trying to break the yearly open. There's upslope resistance. What do you do here? Are you going to buy a potential upslope resistance against the low, which is 100 some odd pips away? Or are you going to try to fade this on this recovery with the hopes that that slope holds for a test of the support? Neither sounds appetizing for me. You're playing within the confines of that massive outside reversal candle. I'm looking for some guidance here on the British pound. Drill down deeper. Here's the daily chart. And here's our last daily chart on FOREX.com. This was published back on the 6th. And the focus was, hey, the monthly opening range is taking shape right around that 618 that we were talking about, right near at 36. Let's see what happens there. Well, we grinded and grinded and grinded, and we did set a very nice monthly opening range straddling that 618 that we just talked about. Okay, cool. What was the break? It was right here on the 14th. A break of the monthly opening range. You're looking for a late month low. Well, we registered a low here on the 18th, but it was an outside day reversal off the low, which took us back above the 200-day moving average. And that's the aftermath that we've been in for the last few days. Is that snapback after false break of the 618 on the downside, false break of the 618 on the upside. Classic British pound behavior, right? So now this brings us back into the 618 of that exact range, 35.22. What do you do here? Drill down deeper. Here's the 4-hour chart, and we have a new slope, obviously, from what we looked like a few earlier in the month. So here's the new 4-hour chart I've been working with the guys in the opening bell. By the way, if you're on the U.S. state side of things, you should have received the link to the opening bell, which is now open for U.S. clients. So I do encourage you. We do this every single morning. It's not streaming on YouTube. It's only open to the go-to channel where you can open any questions that you have every morning. And that does get published on the YouTube channel every morning, roughly by 10, 11 o'clock a.m. Eastern. So would love to see you there. But this is what we've been looking at for the last couple of days. This basic slope, which is just a mimic of that support slope off the low. We broke the median line late last week. Here's the bounce and pop back through the yearly open. 35.22 heading into the close of this week. I know from a time value it doesn't help so much, but heading to the close of this week, converges on downslope resistance. Basically, what we're looking for is the potential for upside exhaustion in the British pound early in the week here. If we are going to maintain this slope, rallies need to be limited by that parallel, basically 35.50s. Okay, and you need to buckle not only below the 200-day, but below the median line to really fuel the next leg. So very low conviction trade out of all the majors is sterling. Looking for a little bit more of a clarity there. You don't have any sterling data or anything of note until Friday. You got Governor Bailey on the wire there, but not any economic data of note. So watch the US dollar price action to really be driving here. Sterling trading just below potential resistance near 35.22. Look for reaction there. If reached, push below the 200-day moving average would put us back on course for a larger pullback. But little skeptical here on the sterling. Questions on the British pound? All right, that's number 3. Number 4, we got CPI data on tap tonight out of Australia. Here's what the Aussie looks like. The focus here has been the exhaustive pullback off of uptrend resistance. So, for the longest time, this was published back on the 21st. Longest time we've been talking about this same exact slope from last year. Here's uptrend resistance. We caught it back in January, caught it back in February. Here's 72, a big lateral level, false break, and then we reverse lower. And the focus has been on this pullback. And earlier in the month, we said, look, we're testing the 71 handle. That's a basic 38.2 retracement of the early range, of the most recent advance. And that's the median line. So if we resolve a weekly close below 71, well, then that's just looking for a larger test of uptrend support lower down. You'd be looking for potential for a nearly 100 pip drop at least towards the next support zone. But that was the major inflection zone we were looking for. Here's what we're doing now. Okay, that low held, and then here we are with a little bit of a pop higher. Is this the extent of the pullback from uptrend resistance to uptrend support? And we're going to go off to the races? Or do we slide below the median line for a deeper correction within this uptrend? Remember, that rally into the high was accompanied by pretty rad divergence, right? Here's price action making a higher high. Here's the oscillator not confirming a new extreme in price. So here we are. Pat, if you have time to review Aussie CAD, interesting cross. We'll do CAD next, and then we'll pull up Aussie CAD. Haven't taken a look at it, Pat. Yeah, sure. If we have time, we'll take a look. So Aussie pulling back below that pivot and sitting at upslope support. Okay, that's all we have from the weekly chart is key support at 71, key resistance at 72 into 72.13. That's absolutely paramount. What happens in that range? Well, that's where we drill up the near-term charts. Our last short-term update was highlighted back on the 12th, a little bit older, but it was just as we were buckling above that 72 handle, we said, hey, let's watch the objective monthly open. That's 72 proper. We already had 72.08 and 72.13, and this converged on basic slope support. We were looking for a reaction there, and we got it. Here's Aussie dollar on the daily chart. That level broke, it buckled, and you got a break of support, which led to this drop right back into that 71 handle. We sat there as support, That's still key support. You need to close below 71, to suggest a larger setback is underway. Initial resistance overhead from here, right back at former support, 72 into 72.13. The objective monthly open, 618. Remember, that's from the decline off the highs you made in 2021. And then this is the 100% extension from the ascent off last year's low. So a huge pivot zone. Drill down even deeper. Here's the 4-hour chart. And here's the slope, and here's what it looked like back then. So we hadn't had the downslope in play yet because we hadn't peaked out. But then once we tested that and we broke and this failed, we added this downslope, which is what we're looking at now. So similar levels, but the 71 handle remains that key support zone. We dropped into it last week. We rebounded. Here's last week's high, initial resistance, 71.85. Key resistance, 72.13 to 72.07. Initial support, 71.08. Downside break opens up 70.55 and the 70 handle. That's the 618 of the rally. That's the 50% retracement that converges on slope basically this week. So the levels are really clean. If Aussie is heading lower on this stretch, if the pullback, if the correction within the uptrend has deeper to go, rallies need to be limited to 72.13. You need to break below 71 to mark resumption. Northbound of 72.13, you're looking for uptrend resumption. 73 is your next major level of resistance just above the yearly highs. Make sense? And one of my favorite levels just because they're pretty clean. The other one that's my favorite setup is dollar CAD because we broke a major pivot last week and the reaction we got is exactly what we wanted to see. That level is 137.25 into 137.33. You guys have heard me talk about that level ad nauseum. Why? Well, it's the objective yearly open. It's last year's objective low week reversal close, okay? An objective pivot in price. So inflection on the upside, inflection on the downside. 2 weeks ago, we ran into it. We said, man, if this breaks above and closes the week above, it's technically a breakout. It did. Last week, that breakout extended into the first major zone of resistance, the 618 retracement of the drop. That's 38.08. Not only did we test it, we closed above it. So where do we go from here? Well, on the weekly chart, you don't really have much until slope, and that comes into play somewhere around 39. Okay, that's a basic trend line. That's a 3-point touch. Remember, any 2 points can make a trend line. The third confirms. So we have a 3-point confirmed trend line. That comes in near 39. Okay, drill down into the daily charts. Here's our last daily chart update on FOREX.com. This was written back on the 18th. And the focus was we had already made that bounce. Here's the 618 retracement at 138.08. Here's the the 52-week moving average. And that's exactly what we're trading above right now. If this is the breakout, we need to maintain stance above this zone. Our last short-term update for real was right here, and this is what it looked like. We were testing uptrend resistance. We had buckled above 37.23, 37.33. We said, hey, if this is legit, pullbacks need to be limited to 36.92. Next upside target, 38.08. The 200-day moving average confirms just a little bit higher at 38.10. 38.13. So we're looking for reaction there. Here's the live charts now. Okay, we're stuck right there. Never got that pullback, never even buckled below 37.25 rather. We stayed right there. And then the thrust, boom, we're right at resistance. We're right at uptrend resistance into the start of the week. So look for reaction here. Drill down deeper. Here's the 4-hour chart. Really nice objective upslope off the low, high, low. Had this pitchfork nice in play. Again, 36.92 converged on that lower parallel. We wanted to see support at 37.25. There's resistance at the median line. Here's what the chart looks like right now. There's resistance at the median line. Okay, so watch for ideal scenarios. You get like some sort of really tight weekly opening range break right below the median line. Then that breaks higher and you get 38.77, which is the next upside target. But at the end of the day, if dollar CAD is heading higher on this stretch, pullbacks need to be limited by 37.25, 37.33. Topside breach above the median line, which right now comes in near 38.30, exposes the next level up, 38.78. And then the next major key region of resistance, that's not a surprise to anyone, 39.15, 39.41. That's just the objective September high day close, the October low day close, the 2026 high day close. All of that converges also on last month's open right here, 39.15, 39.41. That's your next major resistance zone, okay? So for all intents and purposes, dollar CAD's at resistance right now, النهارده, aujourd'hui, okay? Same thing on Aussie. Aussie dollar trading, not quite at resistance, but a little bit more to go. A little bit more to go. So that's maybe a little Aussie strength, dollar CAD at resistance. So any CAD strength would pull dollar CAD off, right? Where does that put us on Aussie CAD? Pat, is that what you want to look at? Please look at Aussie CAD. Yeah, let's take a look at Aussie CAD. Aussie CAD, is it on my list? Aussie CAD. Oh, okay. Okay, you're treading on pretty treacherous grounds here. I must have covered this for someone in the opening belt because I have some marks on here. So look, the big zone that we were talking about at least the last couple of months was 98.16, 98.20. That's the 2021 high week close and the 88.6 retracement of that decline. It also converged on basic uptrend resistance. We were looking for a reaction there. We spent a couple of weeks grinding into it, right into the open of May. We plowed right through it, and that's basically been support. Look at the pivot there. Point, break, that same point, now support. So it's tempting a breakout of confluent uptrend resistance. That's typically constructive, right? Momentum is not above 70. You would have actually wanted to see that above 70 to continue favoring this stretch. My problem is just those highs. The high close comes in at 99.28. The stretch high comes in at 99.93. You're getting divergence, right, on momentum. So price action is making a higher high and then another higher high. The oscillator is not confirming a new high in price. So you know what I mean? If you're holding long exposure on a trade like this, prudent move, bring up protective stops to break even or better, maybe even a good candidate for a trailing stop. You need that buckle, you need that close above 99.28 to get resumption. If you're looking for new exposure, this just wouldn't be my cup of tea at this point. Okay, because the potential is it's still in a breakout mode, but the momentum is not really on your side. It's looking a little waning, and at the same time, you haven't broken those multi-year highs. Objectively, Pat, I like to take things back to price action as objectively as I can. This is a very clean monthly opening range. Here's your monthly open. Remember, on all my daily charts, the vertical lines are the monthly open, the magenta ones are the yearly open. And so here's your monthly open. You set a low, you set a high in the first 13 days of trade. You test the high, it fails. You test the low, it fails. You have a very clean monthly opening range right at uptrend resistance. That is to say, topside breach, you're likely to get acceleration. You get that topside pump, really start to fuel the rally towards 99.94. Downside break could really fuel a larger setback within the uptrend. So not really my cup of tea right now. But let me just check this out real quick. I just want to see what this looks like. It's a stretch. It's a stretch. Watch that range breakout. Watch that range breakout. It's pretty clear cut. Pat says, thank you, Michael. You're more than welcome. Interesting set. Interesting set. You know, part of having a good trading strategy is knowing where to focus your attention, Pat. Something maybe I'd have an alert system on this on either side of the range, but inside here, especially with what Aussie and what CAD is doing respectively, you know, it's a strong uptrend. And I don't want to jump on the tail end of a mature uptrend. At the same time, I'm not cute enough to try to call a high here. So watch list, something for the watch list. Yeah. Okay. So we did Aussie, we did CAD. Here's the Japanese yen, the abomination, doing what the abomination does. So not my cup of tea, not my favorite trade. You guys know where I stand on this, but here are the levels for your consideration. So our focus has been the fact that Japanese yen had rebounded off of major support. This was highlighted back on the early in the month, on the 7th, excuse me. And the focus was, hey, we just dropped into significant support. Forget the BOJ, forget the commentary in the headlines. Man, we're at major support. What was that support level? 55.40 into 54.80 right here. The 2026 low week close and the basic 618 retracement of the year-to-date range. It also converged on uptrend support from last year. 1 point, 2 point, 3 point confirmed. You might even want to say that as a test there back in January, February. Here we are again. We highlighted the risk to the downside while above 54.78. Here's the live charts, guys. Off that low, we rallied more than 2.7%. So what do we do with this rally now? The first level of interest or the first major significant zone of resistance was 58.55. That was the 618 of the drop. Here's 58.55. We closed above it 2 weeks ago. And not only did we close above it, last week we tested it as support. Is that confirmed breakout? Well, technically it is. So should we continue favoring the long side, even though the BOJ is sitting there with a cannon pointed at your face? Yeah, man, that's on you. If that's your type of trading, that's on you. But that's what we're basically staring at, okay? Drill down into the daily charts. Here's what it looked like back on the 22nd. We were talking about this recovery, and the rally had fizzled out right ahead of the 786 retracement, but there's 58.55. Basic 618 had held support. We were looking for a breakout of this range. Fast forward, we're still in that very same range. Okay, resistance 59.50, support 58.55. Looking for a break of that range. Technically, you are constructive well above 57.90 into 57.70. Why? Well, that's the monthly opening range break. Here's your monthly open. You set a low on the first day of trade. You set a high on the third day of trade. That fourth day, you test the low and the high. Holds. You break the highs. You're looking for a late month high. It's the 26th, right? So it is technically in a near-term uptrend. We are trading just below resistance. Technically, support is 58.55. You're constructive above 57.70. Here's what the near-term chart looks like. Nice pitchfork off the high. This is just mimicking this basic slope. Had us coming off the upper parallel. There's 57.70, 57.90. Here's the live chart now. Nothing changes. Nothing changes. Here's the side-by-side. Okay, so there's that resistance. Last week's opening range, the weekly opening range, never broke. So this thing is coil, coil, coil. Initial support 58.53, initial resistance 59.50, key resistance 60.21, 60.73. That's the key resistance zone that turned us earlier in the year, in the month. I guess last month that is. And bullish invalidation is 57.70. Okay, so Momo is tired. You don't really have much. There is some inflation data out of Tokyo that hits the wires on Thursday. Could be a market mover that causes some volatility here. But at the end of the day, the PCE figures still might be the bigger play. You're getting a pullback in yields, which have seen an extraordinary breach higher. Last couple of days, you've been seeing that come off a little bit, which has been tempering this as well. But at the end of the day, man, you're still constructive above 57.70, near-term support 58.55, breach above 59.50 needed to mark resumption. All things held constant. That's the Japanese yen outside of intervention. Questions? All right. That is Japanese yen. Last from the FX block. Here is Swissy. So Swissy has been doing kind of its own little thing near term. Got a little bit of a pullback that got a little bit deeper than I would have expected it to get, but we're still holding support. Here's dollar Swiss on the weekly charts, and here's our last update on dollar Swiss on FOREX.com. We published this one back on the 4th of the month, and we were talking about this key support zone at 77.72 into 77.68. That's the 618 retracement of the rally off the yearly low. That's the year-to-date range, and it's also the objective 2011 low week close. So the week that the low is registered, the close of that session was right there. It's been a clear-cut pivot in price all throughout the course of this year. Pivot break back in February, resistance, 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 pivot breakout in March, and then here it is again as support. So we dropped right into that level, and that held support, and we rebounded. The rally fizzled out right ahead of resistance last week. The yearly open comes in at 79.26. And so the weekly chart has you like between a rock and a hard place, okay? Resistance is right there. The 52-week moving average is just above it. So 79.26 into like 79.40 is key resistance. Key support is 77.72 and 77.69. So we're looking for this massive, larger range breakout, which we've been in for over a month now. And that's dollar Swiss on the weekly charts. So if the weekly chart doesn't get us turned on, typically it's something we won't drive too deep into. Here's what it looked like on the daily chart. This was written back on the 15th as we were breaking out just of a near-term trend, okay? And the level of resistance was also defined by a breakout of the objective May opening range. So you got a monthly opening range breakout. You got a breakout of downtrend resistance. We were looking for that rally to extend into 79.25 and looking for a larger, more definitive price action there. Here's what it looks like now, right? The rally never quite made it all the way up. So here's what it looks like. In fact, we fizzled out that day. That was the high. And not only did we not reach 79.26, but we actually buckled right back below 78.75 a few days later. And we're now trading right back at key support at the monthly open, at the April low day close. That's 78.16 into 78.13, I think is the open. But you get the picture. And so again, what do we do here? Right? I'm starting just to lose some focus on it. If this was a legit monthly opening range break, I would have wanted to see support hold near like 78.50s, near those highs that we made early in the month, but we didn't. Is that a monthly opening range reversal? Well, that only gets materialized and confirmed if we break the monthly open, and that's 78.13. So low conviction. Roland, are you in the room? I see there. Yeah. This is low conviction for me at this point. Here's the near-term chart. Was I showing this one in the last short-term update? Yeah, it's the same slope. Okay, we failed at the median line. We wanted to see key support hold here at 78.14. Again, it's 78.18. Look what happened. We dropped there into the overnight trade session, and then we popped right through. So technically, you're still holding support, but man, it's a tough call. It's a tough call. Ideal scenario, the weekly opening range sets up right above this, and then you get either a break of 78.75 that leads to an extended play back up to 79.30s, or if the weekly opening range breaks to the downside, I wouldn't really be interested in on the short side of the trade, just because this is such a big zone of support. I don't want to get caught shorting into a spike like this, but that would be the threat if this downside breaks. It's 77.72. Look for a larger reaction there. Obviously, guys, as always, it's not a trade recommendation from FOREX.com or StoneX, just my humble interpretation of the technicals here. But I put this in the same category, at least right now, with what's going on in the British pound. I kind of need to see a little bit more price action before I get excited about it. Make sense? Roland says, cool, thanks on dollar yen and dollar Swiss, both a wait and see for me at this stage. Yeah, right now, I think so. Dollar yen is poised. That thing is coiled, and there's so much. The trades that have all the headline of risk, event risk, the unforeseen, the BOJ, those are the ones that the volatility spikes can really materialize in. Now we're heading into the close of the month. So I do want to just caution everyone. Always into the close of the month, Thursday, especially as you head into Friday, you want to be a little bit light, a lot more nimble, and your new exposure should be 1/2 X, 1/3 X if X is your normal trade size. Make sure all your protective stops are well defined as you head into the weekend on that monthly cross, because that's just a treacherous time for retail trade. And amongst all things, we also do have that headline risk of the war headlines, which at any point could really spur a surge in volatility. So make sure you're being a little bit more reserved in all of your open exposure. Okay, that's the FX side things. Let's look at gold. Here's what gold looks like as we open up the week. The pullback sat at support. It tried to break support, and that same support zone still remains in focus now for the second consecutive week. Here's what gold looks like on the weekly charts, and here's our last update on FOREX.com. This was highlighted back on the 23rd, not too long ago, and we were focused on, actually, I think this published during the weekend. The focus is 44.92 into 44, into 45.33. It's been the same level. Again, guys, quick reminder, you can click on the link in the report, see our previous update. This was highlighted right into the start of the month. We were talking about this same exact support zone. We actually tightened it up even more. It was 45.40 into 49 to 44.92. Now it's 44.92 into 45.30, a little bit tighter as we zoom in on the latest chart. So we're looking for reaction here. Okay, you need a confirmed weekly close below 44.92 to validate the break. Now, if that does break, that pivot would suggest you have a deeper correction underway in gold. Yearly open comes in at 43.19. Then you're talking about the yearly moving average. That's right now 41.75 and 40.70 into 41.12. That's the October high week reversal close and the 618 extension from the decline off the highs. So the risk is very significant if you see a weekly close below this key pivot in price. Period, exclamation point, end of paragraph. We've been talking about this same zone for over a month. Okay, so nothing changes there. Gold on the short-term charts, well, I gave you this update on the 14th. It's a bit older, but the focus was, hey, we just rebounded off of that key support at 44.92, 45.33. If that recovery materializes, here's the 618 retracement resistance. Here's your monthly opening range right between well-defined parameters. Key support, Fibonacci resistance. Let's look for the breakout. Well, fast forward 2 weeks, we never got the breakout. Here's the live chart. Okay, we dropped right back into support. We did finagle a single daily close just below that level with zero follow through. The next day, we just went right back up. Okay, so that was not a conviction break. Here's what it looks like on a close basis. And even momentum on that drawdown couldn't even make a lower low from the previous month's low. So we're sitting at support. You know what I mean? We're just sitting at support. Last week's opening range is intact, and we're still there. You want to get really into the nitty gritty and talk about something that we've been mentioning over the last couple of days in the opening bell. I'm just looking for a break of this day's range. Okay, Tuesday, May 19th. I'm looking for a breakout of that day's range for guidance. Whenever we get these outside day reversals, typically when you get a reversal to the downside like that at the highs, it's exhaustion. But oftentimes, if you get an outside day reversal lower at the lows, that also can be exhaustion, right? So I'm looking for a breakout of this day's range. The next day we tried to do it, couldn't do it. 4 days later, we're still trading in that single day's range. So let that be a near-term tell for what's going on in gold price action. Zoom in even closer. Here's the 4-hour chart looks like. I don't think we had this slope in play back then. Nope. Here's the slope I'm working with now. Objective, high, low, high, pitchfork. Median line support, median line support. Here's downtrend resistance converging on that same 38.2 retracement. 45.75 initial resistance. We opened up the week yesterday. Resistance all night long. Resistance, resistance. That now converges on downtrend resistance. So real near term, look for a break of this range, 44.92 into 45.75. Look for a breakout of this near term range. Downside break opens up 44 all day long. 44 is big. It's the 618 of the rally off the low. It's the yearly low day close at 44.06. Just below that is the 200-day moving average at 43.78. So you got a nice zone. All of those levels converge on the median line over the next few days. That's the downside level if this level breaks. Initial zone of interest right now is 44.92 into 45.75. Questions on gold? That's a multi-time frame drill down on every single, not every single, but like the 3 major time frames here. Poised for breakout near term. Watch that. Okay, now remember, higher interest rates is not a positive for gold. So as the interest rate outlook from the Fed continues to shift, it's been sort of a headwind for gold here. Even though the relative expectations of higher inflation typically would be a bid for gold, you're seeing that sort of suppressed here. So keep your eye on that range break in price for a tell. Here's oil. So commentary coming out again that there is sort of a truce at least being outlined. That's going to at least open up the door for a ceasefire and a prolonged period of negotiations with regards to the nuclear material and all that good stuff. So look, the commentary here has been a yo-yo. You get one leak from the administration that says X, you get something else from the IRGC or the Iranian news headlines that say Y. We meet somewhere else in the middle with a truth social that kind of irons it out. Rinse, wash, repeat. Do the same exact thing over and over again. So don't get jackknifed. Keep your eyes on price. For oil, we are testing a level of interest that objectively we've been talking about for months. Forget the headlines. 90.79 to 91.78. What is that level? Guys, that's the 2023 high day close, the 2023 high week close, and a decent pivot in price. We've been talking about that level for quite some time. The monthly range low is just below. This is a pivot we've been watching. Largely speaking, we've been talking about the fact that oil has been in a massive consolidation range since the initial March 9th rally. All right. And you know, my line in the sand, I've been telling you guys that line in the sand has been 101, 101.50. That's been the level of which below. I'm kind of thinking maybe there's more chances that a high is in place. Above, panic. You could see 109, you could see 114, right? That's sort of been the game plan. We buckled below that level last week. Here we are at key support again. Close below 90.79 would also now necessitate a break of this slope we've been watching on the 4-hour chart. This is an objective low, high, low from the decline off the highs they made back in April. You can see the upper parallel caught resistance, the 25 parallel caught support, the 75% parallel caught resistance last week, 25% parallel broke last week. Here's the lower parallel. So if we break below this zone, it opens up the high day close, which is 85 proper, 85.04, and that's the big whopper zone. That March 9th rally that took us near 119, the close of that day, guys, was right there at 85. It was support later that month. It was the close low for April, and it converges on uptrend support basically over the next few days. Initial support, key support. Resistance still 101, 101.50. Make sense? Let the headlines take it where it may. But right now, that's the pivot zone we're looking at. Okay. Last but not least, just a quick look at, and then we'll take a look at some stocks there. Karina, I see you want to see take a look at stocks. Here's what Bitcoin looks like. You know, we're sitting at support. The major focus on the Bitcoin charts has been, at least the last update. This was written back on the right into the start of May trade, and we were talking about this major resistance into 81,000. It was 81.38. That was the 100% extension off the low. Just a bit higher, you had 83.712, which was the 2025 low week close. Here's the rally. We went through 81. We closed above it, but then the following week, we quickly broke down. False break scenario. Here's the pullback. The first pivot zone, 74,434. That was checked as support. You're still constructive above 70,283. That's the low week close for the year, and it converges on basic uptrend support. So that's the real whopper support zone. Here's your initial support, right? Drill down deeper. Here's what the daily chart looked like as we were approaching that 81,000 and uptrend resistance. Got a little messy there, got a couple closes above, but it quickly pulled back. Here's what the live chart looks like now. Okay, we rallied right into that zone. Again, on divergence on that last pump, slammed lower. Here's the pullback. We're now sitting at the monthly open, the monthly opening range low, and that key support pivot at 74,434 into 76,159. You're right at support. Okay, bullish invalidation is 70,283. That's the level that would need to break for us to suggest, there's actually a much steeper decline, a much steeper setback underway. Look for 57,000 in that case. But all things held constant, that's bullish inval. This is initial support, 81,038, still initial resistance. Key resistance, 83,712 into 85,273. So level is still pretty clear here on Bitcoin, sitting at support, looking for potential inflection off 74,434 into 76,159. Make sense? All right, let's jump into stocks. So got only a couple of minutes left, but here's what the S&P 500, wrong charts. Here's what the S&P 500 looks like right now. So, man, we've broken everything. Here's our last update. It's been a while. I'll probably have an update on this into the weekend, guys. This was highlighted back on the 18th of last month, but man, the levels still continue to play out. We're looking at a major pivot zone at 71 to 28. That's the 138.2 extension. We closed that week right there. The following week, we broke. Here's the live chart now. We ripped through. We rallied right into the upper parallel. We closed above that. We saw support there last 2 weeks, And even last week, we buckled northbound of 74.48. So that is now near-term support. The next lateral level is 76.77. That's the 618 extension just from the advance off last year's low. So 1, 2, 3 gives you that 618 extension at 76.77. That's your next lateral level in the weekly charts. But a breach of uptrend resistance can oftentimes be the sharpest part of the rally. So I do want to just warn you guys that, we don't want to get cute on a rally like this because you're in overbought condition. As long as that condition holds, the bulls have it, right? This is now 9 consecutive weeks up. We've seen 9 consecutive week advances before. When? 2023, right here. That one saw one simple weekly pullback before resumption. So just when people are like, oh, it's 9 weeks too up, it's got to be too much, you got to get the pullback. Well, yeah, but the game, the trade probably still isn't the pullback. It's probably used that pullback. So obviously, guys, not a trade recommendation from FOREX.com or StoneX, but looking at this objectively, it looks like a breach of uptrend resistance. That is maintained while above 74.48. So let's use that as the benchmark pin. Drill down deeper just to show you a picture of what the daily chart looks like. Here's the daily chart. A near-term slope that may be in play. I don't know yet. I was working with this earlier this morning. It's too early to tell. It's just mimicking a basic slope of those 2 points. Does suggest that you are seeing a little divergence here. Price action making a higher high, the oscillator not confirming that high. But both of those reference points are above 70s. Do note that those tend to be weaker signals from my experience. So not a reason to get bearish, but certainly a reason to curb your upside expectation, at least near term. If we breach that slope, there's 67.77. Okay, there's the upside potential. Drill down even deeper, there is a near-term slope I have been tracking for quite some time. This is right off the March low. This is nuts, guys. This has continued to hold. I haven't changed anything. An objective low, high, low off that March low has just been like textbook. Keeps us constructive near term above 74.48. Next upside level, 76.77. Make sense? That's the S&P 500. Drill down deeper. Here's what the NASDAQ looks like. That breakout, I have a lot of work to do as far as identifying near-term targets from here. Look, the last level of resistance that we talked about, especially even on that report, was right there. I didn't even have it here. Was right there at 324. That's now support. Okay, let me drop this 618. Hold on one sec. Forget that. That's now support. 28,324, 28,219. We need to come up with some closer upside targets from here. But just to show you again, a breach of uptrend resistance, sharpest part of the rally, right? Sharpest part of the rally. Now you're in overbought condition here. So the potential is the bulls have it. You haven't seen an uninterrupted 9-week rally. Yes, last week we actually did snap. What was that? A 5-week rally, a 6-week rally to the upside. So you got a little bit of a reprieve there. Losing some waning upside momentum, but it's still constructive about 28,219 near term. Drill down finally to the Dow, and this is what the Dow looks like. Right here. This is the one that's playing catch up. Okay. First of all, momentum hasn't broken even the highs for the year yet. So there's room to build here if we are going to actually see a little bit larger of a break. But here's what the Dow looked like into the start last month. The level we highlighted was the objective high week close for the year was 49,500 proper, right? We sat there for 4.5 weeks. We finally broke last week. And there's the upshot break that took you not only through the high week close, but through that 1618 extension and through what? The objective opening range highs for the year. Here's your yearly open. You set a high in February. You set a low in March. Your first quarter opening range is set. If this break is legit, you should be looking for a third quarter high. So here's the break and here's the close above. If it's corrective or if this break is validated, Even on a stern pullback, losses should be limited to 49,500. Okay. Initial support, 50,271, but losses should be limited to 49,500. Next upside level, 52,000 psychological barrier, 52,951 is the 3618 extension. And that converges on uptrend resistance. So it's definitive time. You know, the S&P 500, the NASDAQ, they broke the yearly opening ranges way early, right? Way early. This one just starting to make the move now, constructive above 49,500. Next upside level, watch 52,000. Okay, I got to run. I'm over on time. Thank you guys for keeping this FOREX.com's most widely attended webinar year in, year out. Get nimble, stay light as you get into the close of the week and the month, and keep an eye on those those core PCE numbers on Thursday are likely to be the major market mover for the week. Forex opening bell, guys. I will see you in just a minute. I'll be a little bit late, but I'll see you there. And guys, I will see you next week, back towards Monday to the Monday schedule, 8:30 Eastern. Till then, best of luck trading and God bless. Cheers.